Reporting on milk markets for the week of June 19th. This is Dr. Longstrelms from FARME Institute. I've pulled together a program for you this week which highlights several things that are going to impact the milk markets in this next week. But first, I'd like to remind everybody that these podcasts are done weekly and are posted on a website called thecwtgroup.com. So what we had this last week is the second of the National Dairy Sales Reports for June, which was a bit of a reality check. We had a record on spot market for blocks on Friday. We had an advanced prices for Class 1, which are $5 above June. And what I want to do is add some slides that talk about exactly how fat, protein, and other solids will be priced on the farm, and those will show you how those are changing through the course of time. And finally, there is a new section that for this week is called Psychology of Hedging in an Up Market. So sit back and let's get started. This week we start with a green screen because through the next 12 months there was some upward movement in the overall blend prices. This last week we saw the second June National Dairy Product Sales Report, and with that became the July advanced prices. This report came in much stronger than I had estimated. It came in supporting a Class 3 of $20.43. And this is a classic example of where you let emotion and history kind of come in and say, well, we don't think it can actually be as strong as the model is saying, so we're going to tamp it down a little bit. But when you let the model run what I call blindly, ignoring what has happened historically in the dairy industry, it came out pretty close and just saying the only thing that overperformed this week is butter. So that kind of teaches a lesson to remember that whenever we say that doesn't seem right or that can never happen in the industry, well, it actually can if the government is manipulating prices and other things are going on that are not natural. So again, butter kind of overperformed. Barrels came back into line as to where they should have been. I think that abnormality last week with them underperforming was just a blip. So now if we look at the next 2 weeks, this is gets to be the crunch time in the industry because this is where the spot market has actually jumped up 40 cents. And so it's whether you believe that the National Dairy Sales Report will follow that 40-cent jump in the spot market or whether it will not. And so these numbers actually assume that the National Dairy Sales Report will follow up that spot market, and we'll end up with a cheese settling around $2.27 and a Class 1 price of $21.59. If we carry all this through, we're going to end up with a minus $4.91 PPD and about a $16.67 statistical uniform price in Boston. As much as we would like to say that that's not going to follow up, the reality is on Friday we hit an absolute new high with blocks. There were actually no trade. This is a graph from the Daily Dairy Report, and where they showed that the 265 block price is actually higher than we ever had in 2014. And we can't ignore the fact that the spot market currently is supporting a $23 Class 3 price. The Class 1 advanced prices that came in were $5.14 of the one for June. I've got the numbers here, and you can really see how cheese went from $1.18 in the advanced prices for June to $2.02 basically for the prices for the July. And so again, for Boston, we're going to have a 1981 Class 1, and this is up $5.14 from the previous month. If we look across the next 12 months, futures softened a little bit, and butter, to use a bit of a pun, so they came down about 4 cents. And the new slide that I put in, and I've got a couple of these in, is I translated these into what would be the on-farm fat prices. And so if we look at how fat will be priced in the Class 3 market, it's basically going to sell in around that $2.10 range for the foreseeable future. It'll come up from where it is right now, but starting in July, basically we're going to be in that $2.10 plus or minus a little bit on farm fat prices. If we tie with that the fact that cheese was very strong this week and came up 9 cents, that was particularly strong in the early months, the June, July, August, September time frame. So what that did is brought up protein prices fairly significant, and so protein prices across the next 12 months should increase by about 34 cents. And what we'll see is a drop off of the June prices and then fall below the $3 level sometime around October. Now this $4.50 number for June is not as high as what I'm predicting, and that's because I don't think the future market have actually figured in where the spot market is. So my $4.57 projection is actually quite a bit higher than this, and that's because I expect the spot market to drive the futures market up here in the next week or two. Whey strengthened by about a penny, and if we look at that, that's going to translate directly into our other solids prices, and so we're going to see nothing spectacular out of other solids above about 16 cents. We're going to be in that 16 to 18 cent trading range. Now if we tie all these together with butter decreasing, cheese coming up, whey about the same, we look at what happened to actually class 3, because those are the three things that make that up. And it came up about 90 cents, and that was particularly strong in that June, July, August, September time frame. Again, this is the direct effect of the government stepping in and buying a lot of fresh cheese, and on Friday they announced they would even buy some more. So I think these numbers are going to remain very strong in the short term. Now if we put butter together with non-fat dry milk, that's actually what drives the class 4, and we see non-fat dry milk came up just about a penny, but class 4 actually dropped about 6 cents because of the fat price dropping. So if we tie class 3 and class 4 together, they basically converge around the end of the year. And then they follow each other fairly closely, so there's going to be quite a bit of shrinking of that spread between 3 and 4. That's what kind of drives the PPD. The PPD is going to be negative for June, July, August. In those time periods, you can interpret this as you really don't want to be making fluid, you just want to be making components. And then after about August, we'll start coming up a little bit, and we'll reach that $2 number at the first of the year. But in the short term, you do not want to be providing liquid. What you want to be providing is high component numbers, because the PPD will be extremely negative. So this next week we should have the cold storage report on the 3rd June National Dairy Sales Report. That will tell us as to whether the National Dairy Sales Report is following that spot market up that next 40 cents, up $2.60 price on the National Dairy Sales Report. So until next week, this is Dr. Lawrence Jones from FARME Institute.